Hi everybody, welcome along today for your May edition from Rogers Property Group. Just thought I'd put out a quick bulletin in regards to the RBA meeting for this month. So as you are aware, the RBA meets the first Tuesday of every month, and they've just done this one for May 2021. No change in regards to interest rates. The cash rate still remains at 0.1%, which is extremely low. Historical lows at the moment, there's no doubt about that. RBA has come out and said that they're not anticipating that interest rates will increase until probably 2024. Inflation figures have also come out, and much to my surprise, inflation is still very, very low. Inflation's sitting just over 1% at the moment. The RBA's guidelines are between 2 and 3%, so we do have a long way to go in regards to inflation, which I find quite surprising because across the board, as far as consumables goes, labour goes, construction goes, everything seems to be going up in cost at the moment. I suppose wage growth from a national perspective is still pretty subdued, and I don't think that we're going to see an increase in wages, an increase in inflation until we see a decent increase in wages, and only then, once we see an increase in inflation, will we see interest rates rise. So we are very safe in regards to interest rates rises for an extended period of time. So if you are looking at getting out there and investing, feel safe in the fact that I don't think you're going to get slugged with any rate increases for any time soon. For an owner-occupier at the moment, you can borrow below 2%. It is extremely low. From an investment perspective, it's slightly higher than that, and you're going to be somewhere between 2 and 3% at the moment. But if you're buying an investment that's giving you a 4 to 5% yield, then you're in a very good spot there, because not only is your property not going to cost you anything, it's actually going to start to pay itself down and put a few dollars back in your pocket. When you consider that combined with capital growth as well, it's a bit of a no-brainer at the moment. I hate that saying, but it is. It's a bit of a no-brainer at the moment because of the fact that it doesn't take much to work out that that's a really good investment at the moment. Hence, so many people are starting to get into the market, and that's driving prices up. Markets across almost all of Australia at the moment are on the increase. Sydney, Melbourne, especially Brisbane is doing very well. Gold Coast, Sunshine Coast, WA and also Adelaide are all doing very well at the moment. As far as property types goes, apartments are not doing well. The inner city apartments are really struggling at the moment as far as rental increases goes, and as far as capital growth goes as well. Houses and well-located townhouses are the sort of asset that you should be looking for at the moment. They're doing very, very well. A lot of regional markets are doing well at the moment within a short distance of CBDs, but the standout at the moment I think still is Brisbane. Brisbane's a very good market. It's done 8% or 7.9% in the last 12 months. Even growth in the last month has been very, very strong. What's driving Brisbane at the moment is not just investment demand, it's population growth. You've got a lot of people moving out of the southern states, going up to Brisbane at the moment, and what that's doing is that's creating a lot of pressure on housing at the moment. You get more people move into a certain location, they need to live somewhere, and that's putting pressure not only on values but also on rents at the moment as well. So we've discussed values are going up very fast and don't seem to be slowing down at all. And as far as rents goes, they're rising as well. On your average investment at the moment around the Brisbane area, you should be looking at around 4.5% as a rental yield. That will eventually drop as prices go because rents just can't keep up with value increases. But you should still be looking at around, say, that maybe 4 to 4.5% as an investment yield, as a rental yield at the moment. That's what I'd be looking for. So if you stick to your houses, stick to your well-located townhouses, I think you're going to do very well. Your vacancy rates across the board at the moment in Brisbane and the Gold Coast are extremely low. Most suburbs are less than 1%, and a lot of the better suburbs are 0.5% or below. There's a lot of suburbs at the moment that just don't have anything to rent. There's a lot of people turning up to rental home opens and paying more than the asking price. So if it's $500 per week, people offer $520, $550 per week. All what they're doing is they're paying 3 months up to a year in advance at the moment. So very, very strong market at the moment. The median house price in Brisbane is hovering around $600,000 at the moment. And I would anticipate that that median house price in this particular cycle should go right up to the $900,000 plus mark. So we've still got a long way to go yet. Things don't seem to be slowing down. Other markets in Australia, Sydney, Melbourne, Canberra, they've been doing very well as of lately. Hobart has been doing well. I'd be very cautious about those markets at the moment. I can't see Sydney house prices as a median going from, say, $1.2 million to $2.5 million. I don't think that's possible, given the lack of wage growth at the moment. Melbourne's now above $1 million as a median house price as well. I can't see that going to $2 million, given the lack of wage growth in Melbourne as well. So, be selective as to where you buy. If you are looking in southeast Queensland, you need to pay attention as to where you're going to buy, because there are good and bad areas. Some areas you want to steer very clear of. If you want to know more about areas and where to invest in southeast Queensland, or anywhere nationwide for that matter, please get in touch with the office and we'd be happy to help you out in any way we can. Talk to you about rental yields, the best places to go for that. So great time to be investing, guys. Interest rates are exceptionally low, they're historical lows. Property's very, very strong at the moment. And I can say this, once we get over this virus period, I think you're going to see mass immigration come into Australia. It's a very, very unique place in the world at the moment. We've had very, very few virus cases, very few deaths, and that's going to make our lucky country even more attractive to everybody else. So I'd also be prepared for some value increases at a later stage as well. But look, happy investing, guys. If you'd like to know more about the markets, places to be investing, different property investment strategies, then please get in touch with us at the office and I'd be happy to have a chat with you. Take care.